Hi, it's Greg Pearson here from Professionals Arthur Johnson Snowball. Hard to believe that we're gearing up for yet another end of financial year. So we're here today with Kym Arnold from Lincoln's Beyond Numbers to ask some questions that our landlords have been putting to us over the past 12 months. So Kym, thanks for joining us here today. Some of the questions, around this time of year, we have our landlords, we're suggesting to our landlords that they have their gutters cleaned as part of the, before the onset into the winter rains. If a landlord was to opt to do that, is that something they'd be able to claim?
Yeah, look, absolutely. So basically, as long as there is currently a tenant in the house or you are actively looking for a tenant, any maintenance costs are fully deductible. So absolutely. Great.
Likewise, with the air conditioners, which aren't generally used over summertime, but certainly as we're heading into winter, will be used for heating purposes. If an owner was to have that service prior to winter, is that something they could look to claim as well?
Yeah. So that one is fully deductible as well. And that's just because it's seen as maintaining the property to the standard that the tenant was in when they moved in. So yeah, that one's fully deductible as well.
Oh, that's great. Next question. If we've got an investor who's just purchased a property and is looking to do a full internal repaint prior to getting a tenant in there, is there any way they can claim that as a tax deduction?
Well, the tax office is pretty strict on this one, so they consider that particular situation an improvement to the property. So in that case, it's only deductible at 2.5% over 40 years, so it's only quite a small claim each year. So that's it for that situation. But if they say had a tenant in the house and then that tenant moved out, and they had to do a full repaint before the next tenant moved in, at that point it would actually be seen as repairs and maintenance and would be fully deductible.
That's a great tip. Next question we have, so if an owner purchases a property, lives in it for say 12 months and then gets a work transfer and is required to rent the property out, is there a period that they can still claim no capital gains tax in that time?
Yeah, so basically you are able to move out of the property for up to 6 years. And if you then sell the property within that 6-year period or move back in, then you can still sell the property tax-free. But there are like a few rules around that one. So if you move out of the property, you then can't call any other property your main residence. Okay. So if you went out and rented a property, that's not a problem. But if you purchased a house, you would actually have to choose between which property you would call your main residence, and that will affect that decision. So It's definitely a situation I would say speak to your accountant about it. If you're unsure.
Sure,
yeah.
Great. And then what about any left of field items that an investor can perhaps claim?
Yeah, so one in particular that we find people miss a lot is actually like when they go and do like a major improvement to the house and they have to get a loan, or maybe they redraw on their own personal home loan to do it. That interest portion is actually deductible. So you can split your loan up and claim that interest. So that's definitely one to consider.
Oh, great. And likewise, what about some items that investors simply just forget to claim?
So I think the one that we mostly see is to get like a quantity surveyor to go out and do a depreciation report on the property. So this actually makes like a significant difference to your deductions, and the cost of getting the report done is deductible too. So we see that one as a benefit for people for sure.
Yeah, that's a great tip. That's a fantastic tip. And Kym, finally, what 2 quick tips would you like to share with investors to help them with their returns?
Yeah, so I think the first one would be that, just in case anyone's not aware, travel is actually no longer deductible for the rental property, so you can't actually claim a travel deduction for going and inspecting your property. You can claim it in other ways, but yeah, so you can claim it if you maybe go and see your accountant or things like that, but you're not able to actually claim it to go and see that property.
Okay.
I think the second one would also be something that we've actually found across our clients is when a client has a good property manager and gets that annual report, it actually costs them a lot less for us because it's a lot easier for us to prepare that rental summary. So yeah, I think get a good property manager as well.
Great, fantastic. So thanks for your time today, Kym. That was a great informative session. And don't forget, if anyone has any questions, please don't hesitate to give Kym a call at Lincoln's Beyond Numbers or myself.